Back to the markets and those big tech profits. Amazon, yeah, they had a blowout quarter. Gene Munster is with us, Loop Ventures managing partner. Gene. All right, characterize Amazon. Is there any stopping it? It's up $84 a share now.
That was the exact word I had, is unstoppable. Put it into perspective, Stuart. 35% revenue growth in the September 17 quarter, 35% revenue growth in December that they just reported last night. And the midpoint of their guidance was 35% for March, and they usually come at the high end of that, so they may even see an acceleration of growth. This is higher than what Amazon was growing a year ago, which was in the mid-20%, which is just, that's where unstoppable comes. That's the right language around this, because to have a large company like this accelerate growth and maintain it is something to be appreciate.
It's a stunner. It's the most exciting company in the world. That's my opinion. How about Apple? They reported $20 billion in profit in just the last 3 months of last year. Let me ask you if Apple's profit machine is unstoppable.
Well, it's a great profit machine, but before I talk about Apple, Stuart, we need to call out that a week ago I was on this show and felt that the iPhone number was going to be fine, and I was wrong on that. And that's something that we take very seriously. And I think that this focus on the iPhone and the profitability that it generates there's a slight shift in terms of how investors, and I want to leave your viewers with this concept, is that every quarter, for many years, investors have really hyper-focused on what's that iPhone unit number. I think what you're going to see, and Apple talked about this on the call last night, is a shift away from what's the iPhone unit number. People will still talk about it. But this base of 1.3 billion active users that they have, that's similar to what Facebook has, and how they can make more money from those users.
Okay, they're milking their ecosystem, right, is basically what this is all about. Gene, talk to me about Google, because that stock is way down today. What's its problem? It's off $61, 5%. What's the problem?
So the problem is that they pay third parties. So, for example, like Apple, to have Google search within their Apple Safari browser, they pay for that. And they do it with many different providers to see that Google search bar. And so that's called the traffic acquisition cost. So that number was higher than what people had thought. Essentially, what investors are trying to figure out is Google paying a little bit more for the growth that they had, and therefore the stock is down?
That seems like a huge drop because of that, what seems like a relatively small factor for a company of that size.
It is, but, you know, this is something, a trend that's the second quarter in a row where TAC has gone up, and I think it gets investors a little bit nervous that that trend is going to continue.
Okay, I've got to talk to you about Tesla. They're going to create these solar kiosks, and they're selling solar products in Home Depot, in kiosks. What do you make of that?
It's a step to their vision. Their mission statement is to accelerate the world's adoption of renewable energy. To get the world to adopt renewable energy, you got to get it so everyday people can see what that's all about. And going to Home Depot as a feverish Home Depot supporter, I can say that this is going to get in front of a lot of people. Essentially, what Tesla is doing is they're paying for placement in the Home Depot store to kind of evangelize people about their products. And I think that's the right move. They're only going to be in 800 of the 2,200 Home Depot stores, but it's a good starting point.
You know, Gene, the truth is American technology companies rule the world, don't they? Don't respond. I'm just telling you. Okay, Gene Munster, thanks for joining us, fellow. We'll see you again soon. Thank you, sir.
Thank you.